Good day, investors. Today we are going to cover another Brazilian offshore oil company, PRIO. We can look at its business model, what they do they have any advantages, who runs and who owns the business, and finally, what's the value of the company. That said, if you are curious about my investment strategies, check out my YouTube membership where I have two tiers. Tier 1 is a passive one. Every Saturday you receive a report, so by the time you are watching this video, the report is already online for the members. And the second one is the boardroom. You get the perks from the first tier, and additionally you get the Discord access for monthly calls and other discussions, so feel free to check those out. Now, looking at PRIO, it is a Brazilian listed independent oil and gas company trading at the B3 exchange with a market cap of roughly 54 billion real and headquartered in Rio de Janeiro. The company is a pure play offshore oil producer focused on almost entirely on mature fields in the Campos Basin with minimal exposure to gas. So I think 100% of their mix is basically oil. Now, the strategy is to acquire underperforming assets from majors, reduce costs, improve efficiencies, and extend the field life, generating good cash flows. Over time, PRIO has scaled through acquisitions like Frade and more recently Peregrino, combined with organic growth projects like Wahoo. We're gonna talk about those, positioning itself as a low-cost, high-margin operator with a clear focus on oil. Now, a little bit over a month ago, I was in Rio de Janeiro, and I recognized some of their ships actually offshore. Maybe they were not necessarily PRIO, maybe it was Petrobras, but you could definitely see these large, let's say, boats offshore. Now, this map shows that PRIO is entirely focused offshore Brazil, specifically, as mentioned, the Campos Basin, which is the country's main mature oil producing region. All of its assets, like Frade, Albacora Leste, Polvo, Wahoo, and then many others, are clustered relatively close together along the coast of Rio de Janeiro. This geographic concentration is important because it allows PRIO to share infrastructure, reduce operating costs, and run a very efficient hub-style operation, which is a core part of the strategy. So you just cluster them together, you can cut costs, and you can extend those mature fields. Now, this slide walks through, you can pause the video and look through yourself, but walks through basically PRIO's growth strategy over the years, showing how the company scaled by acquiring mature offshore assets, then improving them. It starts with Frade in 2019 as a transformational deal, followed by a smaller bolt-on to Martelo and Wahoo, then a major step up with the Albacora Lesta in 22 and Peregrino in 24-25. The pattern is consistent. PRIO buys underperforming fields, reduces costs, boosts production, and generates cash flows, with Wahoo representing the key organic growth project on top of the acquisition strategy. So buy, mature, optimize, and add bolt-ons with some organic. Now, this is their balance sheet. So clearly they have leveraged up. So as you can see, since 2021, you are now sitting at 5 billion USD debt, which is 100% plus debt to equity. It's really, really high. And we'll talk about more of its balance sheet. Now, at the bottom, you see free cash flow has been volatile, and dividends are not really in a focus. So you can see that 23 saw some dividends, but the main spending, let's say, from the cash flow side is just buying back shares. So as you can see, shares outstanding relatively declined, but production per share is massively up over the period. This is the yellow line. Here, I would like to say the free cash flow, I used only PPE for the capex, but the company also spent additional acquisition costs, as you see in the table, which is not represented in this free cash flow chart. So that I wanted to grasp at the kind of owner earnings of the business without the additional M&A deteriorating the big picture. So that's how you should look at this. Now this shows PRIO's debt profile, which is relatively short duration. As you can see, debt duration here is, let's say, 3 years, meaning a good portion of the debt needs to be refinanced, as you can see, over the next few years. But they managed to secure funding at a reasonable cost, around, let's say, low mid 6%, and short-term debt has helped keep financing costs low for now. Now, it introduces refinancing risk to the business. So if oil prices were to weaken, rolling over that debt could become more expensive or difficult, especially given the higher leverage following the recent acquisitions. So it's something to keep an eye on. If interest rates would rise, the company would be in a bit of a trouble, especially if oil prices would tumble. Now, this shows PRIO's net debt. So we still gonna look more at the balance sheet, which increased rather substantially in 25, mainly driven this is Q3 to Q4, driven by the Peregrino acquisition, along with the ongoing capex, working capital changes, and some buybacks. Now, net debt rises around from 2.8 to 4.3, and leverage moves to roughly 2.3 times EBITDA. So while the company is still within, let's say, a reasonable range for an oil producer, it's clearly taking more financial risk to fund growth, meaning future cash flow and oil prices become more important to keep leverage under control. Now, as you know, we still have a war in the Middle East and oil is still relatively high. So the company with this higher debt level could just pay that down with the higher income from oil because the company is 100% oil. So from that perspective, the balance sheet could be patched up maybe this year. We'll see how that works out. So this shows PRIO has been steadily growing both production and reserves while maintaining relatively long reserve lives, just below 20 years. So that's actually, for 1P reserves, that's pretty good. 1P reserve life, offshore, mature fields. So production increased from 38,000 a day to 106, and we gonna see more as we'll discuss on the valuation part. Now the bottom chart highlights that even after producing nearly 48 million barrels in 25, the company was able to replace and even grow its reserves, as you can see from here. Also, which supports the sustainability of the business. So the company is not cannibalizing itself. It's growing. It's in a growth phase. Now, here you can see the metrics management gets paid for. So they are focusing on cash flow, oil production volume, efficiency, oil commercialization, so sales performance, operating costs, capex, revenue, EBITDA, safety, environmental. So overall, nothing really worrisome about their metrics. I think this is a decent KPI structure. Now, looking at ownership, you have Nelson tenure, funder, controlling shareholder, strategy control lies with him. Big funds like BlackRock and the others. Some insider ownership is also present, which is pretty good. And then other float and whatnot. So let's just talk about the biggest one, Nelson Tanner, who is the founder and controlling shareholder of PRIO. I mean, technically not controlling, right? Because like 25 to 30% he owns through multiple vehicles, as far as I understand. So Nelson is known in Brazil as a turnaround investor focused on acquiring underperforming assets and extracting value through cost reduction and disciplined capital allocation. Basically, PRIO's story. He built PRIO by buying mature offshore oil fields, improving efficiency and extending their life, driving strong growth and cash flows. With a significant ownership stake and his role as chairman, he remains the key strategic decision maker behind the company's acquisition and overall direction. So that's also a key person risk. Now, looking at the fundamentals of the business, return equity, return investment, as discussed, I only look at more of a sustaining capex version because they did many acquisitions. From that perspective, the company is relatively profitable. Of course, 25% return equity is really good. 12% return investment is really good. But of course, they had relatively high debt. And if you look at the balance sheet for the last 2 years, 71% to 105% and 0 times interest coverage ratio it's pretty horrific, although they are liquid enough. So maybe balance sheet is more of an issue at the bottom of the cycle, and we probably will see higher sustained oil prices that could just drastically improve the business, which is already doing fine. Now, I'm going to use these assumptions for my model. You can go through it, how it looks like. So I'm going to use 25, of course, that was a flat. That is a given. Then 26 onwards, these are my expectations. So you have full Peregrino, Wahoo startup, more production, Wahoo full year, peak drilling, growth capex still there. And then I would suspect a relative decline, and then flat capex, even declining capex. Now, probably the company would do more M&A, but this is kind of like a baseline story for me. Using these numbers, 10% discount rate, 4% cost inflation, because we are still talking about Brazil, and of course the structure of the business, I think a higher cost inflation is warranted. Even they have a hub model, everything is clustered together to keep controls around efficiency and help that. But let's just use it like this. Discounted free cash flow value around 103, and then today the stock is trading at 62. Now we have some risks. So of course, oil price volatility is the biggest driver for PRIO, because it's the biggest exposure, of course, since it's a pure play offshore oil producer, so any drop in Brent directly hits revenue, cash flow, and ultimately valuations. Now you have the refinancing risks that come from the company's higher debt levels and relatively short duration, meaning they need to roll over the debt in the coming years, which could become more expensive or difficult to do depending on where oil is. I suspect them to fix the balance sheet with the higher oil prices though. Now and then you have some operational and executional stuff. So risk relates to running offshore assets, delivering projects like Wahoo on time and budget, where delays, downtime, or technical issues could impact my valuation and the company's valuation, of course, and then my modeling. And then we are still talking about Brazil with emerging market risk. Although during my visit, professors and finance people and investor guys were pretty positive on the country's outlook. They said the next election is probably turning full conservative with the left kind of out from the picture. Of course, we still have Lula from the left in Brazil, but they suspect Lula to lose and to have a more market-friendly right-wing conservative government. And of course, they have regional governments and everything. So it's not really a left wing from that perspective because the country is overall more conservative leaning, as they expressed to me. And then the business leaders were really enthusiastic, and actually the culture is amazing in Brazil. So I was positively surprised. Of course, you have some risk in Rio with public safety on the streets, but if you can manage that, everybody is super nice and it's really entrepreneurial. So keep that in mind. Now, final judgment for PRIO. Brazil, offshore oil, mature assets, efficiency, some organic growth. So that's the story. Moat, well, high margin oil, so that's pretty green. I could maybe put the green also here. Clustered assets, hub approach, so that helps efficiency, but you have high debt and short financed and refinancing, and that debt is short financed, so that's a refinancing risk. And we are still talking about emerging market risk in Brazil. Maybe this is too harsh. I would just stay with the yellow. But I mean, you take on risk if oil really goes down, which I don't think it will. But if it does, then the balance sheet is really a threat to the business. Now, management, tenure, founder control, 25 to 30%, proven turnaround and capital allocation story, and buybacks over dividends. This is winning my heart, so that's why it's green. You have a founder-led business, and they are not paying out dividends. They are just buying back shares. The company's owner thinks the company is undervalued. So now, margin of safety, it's yielding on 25 free cash flow yield of 4%, which is not too high, but of course the company's growth and other story helps. And then the valuations, like let's say 103 versus 62. So you have a pretty good margin of safety for the business. Here you can see the company on my table, shows a 67% upside using a 10% discount rate and a decent free cash flow yield. Now, you could compare this company to Petrobras, which is cheaper from just only these metrics. I mean, both the upside and the free cash flow yield is higher, but you have at least no state interest in your business. So maybe that's worth taking this risk. But of course, rules and regulations can change for the whole oil industry. As you see in Europe, price caps on gasoline and those kind of things could, I'm not sure how they would happen now in Brazil, but if they could, it doesn't matter if you're Petrobras or PRIO. But of course, PRIO is selling the Brent. So they are just producing the oil and then selling it, and Petrobras has all sorts of other stuff as well. So I think this is a really interesting company, and maybe I will put it on my watch list, but you will see it in my membership report if you are a member. One additional note, I've received many requests that some of you couldn't upgrade to the new tier. If you used Apple, so like iPad or iPhone, it doesn't let you upgrade it, I think, in YouTube. You have to unsubscribe and then rejoin as a higher tier on the YouTube membership. That's as far as I understand, because some people managed to upgrade and some didn't. So that said, thanks again for watching, and I'll see you in the next one. Take care.